Hey, welcome everybody to Strategy Now here at MarketStream.live. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. This is where we want to cover a unique strategy going into the Fed announcement. It's happening at 1 o'clock Eastern time. So let's jump in right away. We want to take a look at the volatility index, the VIX. Currently trading right now in the spot VIX. This is the cash VIX at 1180. What we're going to do is we're going to look at an actual ratio put spread with some long calls on the upside. It's going to be a unique position, one that's trying to take advantage, and take advantage of not the move in VIX, but a move in bonds. And VIX is it's a little bit difficult to do it in the VIX, so we're going to look at the bonds. Because when we look at the bonds, and we're going to do it through the lens of TLT, that's the iShares hybrid. What we want to do is say, okay, the bonds have been beaten up. They're rallying right now as far as price. Yes, there's anticipation of a rate increase, but I think that's been priced in. And you can see how the bonds have been reacting, even knowing with the 93 or 94% probability that they're going to raise rates, bond prices would come down, yields would go up. But they've been so beaten up, maybe they're going to recover. Maybe they don't raise as much as people anticipated. Maybe they raise more. If they do that, that could challenge the downside. If they raise more. If they don't raise as much or they raise in line, maybe the bonds recover. So what we're trying to do is we're trying to play the upside to the 120 level, but also hedge ourselves at the 117 level. How do you do that and be able to do it prudently with about a fixed risk of potential risk? Well, you can do that by doing what we call a ratio put spread with some long calls. Now, I'm going to type in TLT. We're going to go to create your own. And I am going to go down and it's going to load. And I apologize if this is taking a little bit longer. Currently, right now, you can see that TLT is trading at 117.89, 117.90. We're actually going to do it in the front month. We're trying to play today's action. And so what I'm going to do is I'm going to buy. I'm actually going to enable this all. I'm going to buy the 120 calls. Okay, so these are basically my lottery ticket to the upside. That's where we see the 50-day moving average if we were looking at the technicals. We're going to sell the 118 puts, and we're going to buy the 117 puts. Now here's the difference though. I'm going to buy two of the calls. I'm going to sell one of the 118 puts, and I'm going to buy two of the 117 puts. And I'm going to look to do that for about, you know what, it's actually blowing up on me a little bit, but we're going to do that for a 17-cent debit. That's what the market's offering, and I just want to get it filled. And actually, let's just get this filled. We'll review the order. So basically what we're doing is that we are buying to open two of the 120 calls. If the market in bonds goes up in price, that's going to pay off, and it'll pay off pretty handsomely. We're going to sell one of the 118 puts. We're going to collect about 55 cents. We're going to do that one time. We're going to pay 26 cents. We're going to do that two times, which is basically 52 cents. We got a 3-cent credit here, and we're going to pay basically 10 cents here, so that's about a 7-cent debit. You could probably work that a little bit more, but we're going to place the order. And basically what we're trying to take advantage is a pop in bonds. A pop to the upside in what I believe is oversold bond premium, and we're trying to do it in the short term. What's our risk? Our risk is going to be right now is going to be if, in fact, the bond stays somewhere between 118 and 117. That's our risk right now. That's basically for every contract that you do, it's about $110, right? The rewards are if it moves outside of that particular move. And so keeping an eye on this, and the Fed should be coming out soon. We see now that actually the TLT is actually moving to the upside, as a matter of fact, up at 118.50 now, up $1.08. So we paid 28 cents for that, or 26 cents, or whatever the price was, but we're taking advantage of a potential price move well above and trying to challenge the 50-day moving average of 120. In other words, we see bonds being oversold, even with the rate hike at a 98% probability of occurring. So now you can see how you can use ratio put spreads and out-of-the-money calls with a fixed rate of risk for moves that could be expansive to either the upside or downside, and you're looking to get outside of a range. In this case, 117 on the downside and above 120 on the upside in TLT. All right, folks, that's it for Strategy Now. We'll be back on at 3:30 Eastern Time in Tech Talk. We're going to talk about everything that's transpired after the FOMC. We'll see you then here at MarketStream.live.